this is how it always happens. And all of a sudden, all of the backdated coins that were selling at such a good price are becoming next to impossible to get. And that's for all the major mints. My operations told me that the majority of everything that we've been getting in terms of backdated coins have been coming from European distributors who are having a hard time selling things as well. And but that's changing very rapidly. And all of a sudden it goes from flush to not flush. Premiums are slowly starting to rise. So yes, it is true. And I knew this would happen. It always happens, even when the environment is not as tenuous and freaky as it is now. But yeah, we'll see if it remains. But I would say this is the beginning stages of higher premiums and difficulty, greater difficulty getting product as we head into the second half of the year here with the big BRICS meeting in October and the election in November. I don't suspect it will get much easier as well. I think people will start to wake up.
The silver market is facing an acute shortage, with supply struggling to keep pace with burgeoning demand. Major mints are finding it increasingly difficult to source silver coins, leading to a scarcity that has driven up premiums significantly. This shortage is a result of high demand from both physical and paper markets, alongside depleting reserves, signaling a troubling imbalance that could have far-reaching implications. Andy Schectman highlights decades of market manipulation have further complicated the situation. Extensive monetary printing by central banks and a shift from physical to paper markets have created an artificial environment, suppressing the true value of silver. This manipulation has distorted prices, preventing silver from reflecting its real worth and contributing to the current supply issues. Geopolitical dynamics are also playing a critical role in the silver market. The rise of BRICS and the shift in global reserve assets are reshaping economic power structures, with significant effects on silver and other precious metals. The weaponization of the U.S. dollar and increasing sanctions have further intensified the demand for silver as countries seek to diversify their reserves and reduce dependence on the dollar. Looking ahead, silver prices are predicted to reach unprecedented highs. Schectman forecasts suggest that silver could exceed $50 per ounce by the third quarter of 2024. This bullish outlook is driven by the supply-demand imbalance and the growing industrial applications of silver. Investors are advised to consider silver as a highly undervalued asset with substantial long-term potential, particularly as the market continues to navigate these challenging times. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our daily recaps.
4 banks go each week. One each week, one after the other after the other. It was like Deutsche Bank, Standard Chartered, JP Morgan, and HSBC. And these are the big shorts. And when you take a look at the amount of silver that is bleeding off of the COMEX, that is bleeding off the LBMA, the amount of contracts that are written that are rehypothecated are many, 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 many times over. And it's as if you have to keep in mind that gold cannot be exported out of China, but silver can be. And it's interesting to me that these 4 bullion banks, which are listed on their website, show up 4 weeks in a row, starting the second week of March. And from that day, if you look at the website, or if you look at their inventories of silver, they start bleeding down the second week in March to where they are now, these low levels. It's as if they went there and said, listen, we need your help. And I'm sure there was quid pro quo involved. It's not out of benevolence that the Chinese would give up the silver, especially when they're charging or offering that high of a premium against the Western price. But it's almost as if, and again, this is trying to put the dots together, but it's as if they went there and said, we need your help. We're in big trouble. We have deliveries. We don't have enough silver. We don't want to blow up the system. Give us some of your silver and we'll do X. Who knows what X is? But it's, to me, interesting when you realize, A, that leading up to that, the commercial banks had massive short positions on silver, some of the biggest I've ever seen. B, that they show up at the Shanghai Exchange where the only thing you can export is silver, and see right at the same time, we see all of this drawdown off of the Shanghai Exchange. You have 4 weeks in a row, these big short bullion banks show up there. What was discussed, who knows? But, I will tell you that it was pretty obvious that we were going to see some sort of a pullback, I guess. Either that or the commercial banks would have been run over because their short positions kept growing and growing and growing leading into this last pullback. Now, what that means to me is that they had enough silver to deliver those people who were standing for delivery, but it's as if obviously when they were record short and then there's a drawdown, what is happening is that the commercial banks are taking the other side of the trades that the bullion banks, or that the hedge funds rather, are putting on, which would mean the hedge funds are going short and selling longs to the commercial banks who are covering shorts and taking those long trades the other side. And that's why one of these days the commercial banks will have hoodwinked the managed money into going short. They have taken the other side and go long, and they let it run, because to continue to try and naked short this market is insanity. There is not enough physical silver to deliver. And what differentiates this market over markets in the past is the amount of deliveries, where these markets never really were designed to deliver product, that they have to allow it to maintain the illusion of legitimacy. But these countries that are standing for delivery, like India, who bought more silver in the first 4 months of the year than they did of all of last year. Well, they're standing for delivery. India bought more gold, 1.5 times the amount of gold that they bought all of last year in the first 4 months, and then repatriated 100 metric tons from the Bank of England. The concept of counterparty risk is becoming pervasive. And I think these countries who were never sophisticated, wealthy, or coordinated enough to drain the exchanges now are. And they realize that's how they win this battle against the West, is not to fight them with sticks and stones, but to damage, really.
In today's news recap, silver price slumps amid hawkish Fed comments, high U.S. yields. Silver's price edged lower and posted minimal losses of 0.38%. Elevated U.S. Treasury bond yields amid Fed hawkish commentary undermined the gray metal. The gray metal is neutral to downward biased after hitting an 11-year high of 32.51. Since then, the pair retreated towards an area near the 50-day moving average at around $29, which is the first support level. Momentum turned bearish, with the relative strength index standing below the 50 midline. Therefore, the first support level for silver would be the 50 DMA. If the silver price dives below that level, the next support level will be the 100 DMA at $26.40, ahead of the May 2 low of $26. On the other hand, if silver buyers conquer $29, they must clear the $30 handle if they want to retest the year-to-date high of $32.51. Now, we'll show you the best clips of the latest interview, but first smash the subscribe button, check our links in the description, and hit the like button if you find our recaps valuable. Enjoy the episode.
The bullion banks, which are the commercial banks, the ones that have these too big to fail massive balance sheets, by standing for delivery in a massively overly rehypothecated environment, where in the game, when the game was originally started, and most of my career, 1% or less of these contracts stood for delivery, and now you're seeing large delivery requests bleeding down the exchanges. And I pay close attention to the Shanghai Exchange, because if it keeps bleeding down, where are they going to get the supply to stand for delivery next time? Because we're already at the second lowest level of silver in the 140-year history of the LBMA, and there's only roughly 60 million ounces in registered on COMEX. There's not enough silver to go around. And by the admission of the LBMA that they're trading upwards ends of 2.9 billion ounces of silver per day, which is 3.5 times global mine supply per day, it's a silly game in an environment where countries are requesting deliveries. So yeah, this is more and more compelling argument that we're getting close to seeing the end of the ability of these banks to naked short. You can only suppress a market or manipulate one over an extended period of time by pushing in the direction that it is going. And when you have all of these countries intent on accumulating commodities, a la Zoltan Pozar, and Bretton Woods 3, a system about he who has the commodities makes the rules. I think that is also true with silver. And when you look at silver being really the most largest concentrated short position by a handful of banks of any commodity traded, it just coils the spring that much more. And gives the potential that this could blow up in a very bad way and bring down some of these very large, too big to fail banks. And what does that do to the whole system? Look, the bottom line is silver is undervalued, and it's undervalued in many ways. But you could argue that this pullback, at least from the perspective of above, was done so because the commercial banks were wickedly short, and I think beginning to get nervous. So does that mean, that this is the end of the cartel? Maybe. There are guys that I follow on X, very good chartists and technical analysts that seem to think that the cartel is done with it. They don't have the ability to maneuver the markets the way that they used to. One of these days that will be the case, which is the whole premise of the little boy who cried wolf. And the little boy who cried wolf keeps saying this is going to happen, and it never does until the wolf comes. And that's why being prepared is very important. And look at every single one of these counterintuitive price actions where, damn it, didn't happen, but we thought it would, as another gift to get, to continue to buy before the price becomes stupid or the availability is gone. Now, I believe that will be the case in a world of probabilities. I don't know when, but I think it's highly probable there will come a point where silver goes higher than people think possible. I don't know when that is, but based upon the supply-demand imbalance, the lack of silver that's found in the ground, the continual structural deficits, the lack of inclusion in the military-industrial complex's role in the Silver Institute numbers. I mean, I can keep going on and on and on. The fact that it's coming out of the ground at 7-1, it's been 16-1 for 5,000 years, yet it's priced at 80-1 or nearby. There's a million reasons why silver is, in my mind, the most undervalued, underappreciated asset on the planet and the trade of a generation. And I don't say that lightly. What happens is people get very disenchanted with the counterintuitive action, the lack of performance in a world where it should be performing. But then ask yourself, why would you have a handful of commercial banks naked short to the degree that they are the most concentrated short position in any commodity ever traded on COMEX? There's a reason they're holding it back. But when the rest of the world says, good, you hold it back on price and we'll stand for delivery, and we'll jack up the price in Shanghai if you're able to get it to us here, good, go for it. We'll pay you $4 premium. These things are compelling and, overlooked. And I think what is real is that the flight of metal from west to east is real. And the lack of understanding or the just blowing it off as being not important baffles me. I think it's real, and I think the consequences of it ultimately will be profound, shall we say, in a world where silver is needed for so many things. And I think it is a critical metal. It's not an industrial metal.
What do you think of Andy's point? Is the East taking over the metals? Will the US dollar officially be replaced by the BRICS nations? Post in the comments section down below your honest opinion on the complex situation we're going on, and watch this video right here because you'll love it. I see you on the other side.